Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty 50 and the Sensex have extended their record run for the sixth consecutive session on the back of sharp gains being seen across banks, financials, autos and even metal stocks as well. Remember, we've also seen that for the series as a whole, the Nifty has gained over 1,000 points, registering the fourth positive series in the F&O space as well. And of course, we had 26,200 that was breached for the first time in yesterday's trading session as well, and the highest point that we will refer to on the Nifty from then on is 26,250. Now today's session will also be very important because the Nifty index rejig will also be taking place on Nifty, Nifty Bank and even the Nifty 500 indices. So several of the stocks will be in focus right there, especially Trent and BEL will be in focus too. Apart from this, we will also see how the global market mood, which is buoyant, whether that will be enough and more to propel the Nifty higher from the levels that we have been witnessing so far. Warm welcome and good morning to all our viewers, and good morning, Shail.
Good morning, ladies and gentlemen. A very warm welcome to all of you from Mumbai. What a lovely session all of us had yesterday. A fresh record high thanks to breakneck speed and of course a very high degree of short covering that was seen on the last working day of September's fabulous F&O expiry. So far, the Nifty is now up 5.86%, as is also the Sensex. And this is the time when the gains on the Nifty for this month are double that of the small cap and the mid cap index. So large caps are here, Sakshi. This is the day to rejoice. So this is what we've been hoping for, that banks, autos, and of course, a whole host of other sectors will now start moving because of the hopes of interest rate cuts happening in the Indian geography as well. Remember, mid-September, 18th to be precise, is when Wall Street saw its first rate cut, and it was a heavy 50 basis point rate cut. Now that is getting priced into the government sector as well here, and therefore you expect the Reserve Bank of India to sort of cut rates in the coming months as well. And that is the reason why autos are the top performing sectors. You have a very strong move coming into private banks. Just look at HDFC Bank. And of course, there is no stopping metals over the last 2 or 3 sessions. So these are rate cut themes that are playing out beautifully on the Lal Street. And this is what we need to keep an eye out. There are a couple of stocks and sectors, Sakshi, that I would like to point out. Needless to say, we've seen a record high on the Nifty, as also the Bank Nifty. Sharp gallop towards 54,400 on the Bank Nifty, again led by the biggest of them all, HDFC Bank. This is doing well. And Sakshi, I just want to put this thought in people's mind that now we are headed higher and higher. And that's very simple for 2 reasons. The large caps have started to move, and this is going to be a bigger move than the one that we've seen in mid caps and small caps, not in terms of percentages, but yes, in terms of the names that have started to move. We've marked Maruti over the last 2 or 3 sessions. We've marked HDFC Bank, Kotak Bank from last week onwards. Look at how SBI has come back into the fore. And of course, there is no stopping Bajaj Auto, Hero Motors, Bajaj Twins, so on and so forth. So these are the big boys that have started to move. It is the 8,000 kilo Indian elephant, which is now running on the Lal Street. And this needs to be kept in mind. Now, what is also adding fuel to fire is this cut in crude oil prices. You see global crude oil prices now down to September 10 levels, actually 6-month lows, and much worse is coming for crude oil prices, which is of course very beneficial for a import dependent country like India. So crude oil prices are likely to slip further for 4 important reasons. 1, Saudi has abandoned its plan for $100 per barrel crude oil. Your OPEC will be increasing the production that you see from December onwards. Chinese demand, which is the largest in the world, is completely tepid, actually slipping. And of course, oil from Libyan fields will now come to the market. So all these 4 reasons put together mean that oil marketing companies in India will do well. Stocks will do well. The only 2 stocks that I feel may underperform are Oil India and ONGC, but they've done fabulously well over the last 6 months. So a quiet period for them. Sakshi, we're also looking at a cut in petrol and diesel rates, which will reduce inflation, which will also help the RBI to cut interest rates. So all in all, it's a great feeling to be on Dalal Street. One needs to be extremely cautious on the long side. But as you may have noticed, yesterday's option calls on 26,000 and
Yes.
26,100 that rose by about 50-60%. Even I was surprised. I was taking this flight and I had sent a message to you if you could just mark them.
Right.
But phenomenal rally. And I think it was just grace, Sakshi. Kabhi kabhi kuch dikh jata hai, so we mark it. But
Yeah.
like I said, this is all the market's doing. We are at the receiving end of this eternal grace, and let's hope this continues. And I believe there is some good news coming in from Wall Street as well. What is the SPX doing?
Absolutely, Shell. So continuous up move on the Wall Street as well. We've seen S&P 500 settle 0.4% higher after hitting its record high level of 5767 during the session. Remember, the Nasdaq Composite and the Dow also have ended over 0.6% higher each. So across the board, there is a stellar move that we are looking at as well, and that has fueled hopes within the Asian markets that have also opened higher in today's trading session. And look at the Nikkei, the Kospi, the topics as well. Across the board, we will see a lot of move coming in. So the Nikkei is up 0.5%, especially the Hang Seng, that's up 2.3%. The Shanghai Composite up by 1.1% as well. And the GIFT Nifty trends are also indicating to a positive start right now. They've cooled off from the morning highs that they had hit of 26,300 and beyond that, but still above 26,067 is what it is getting indicative of. Overseas investors have again turned buyers in the Indian equities after staying sellers for the last two trading sessions. FPIs have mopped up, stocks worth 629.9 crores. Domestic institutional investors, they remained buyers for fourth consecutive session, and they have purchased equities worth about 2,400 crore rupees as well. So keep an eye out on the entire space. Let us also look at how some of the other key stocks which you need to keep an eye out on too. So Trent and BEL, like I pointed out, these will be those that you need to really watch out for. These stocks will be getting to prepare towards the end of the session under the Nifty Rebalance Act, get included in the Nifty, which will start getting reflected from 30th of September onwards. And there is an expectation of flows over $300 million coming in for BEL and about $500 million coming in for Trent also, with this inclusion coming to fore. Divi's Laboratories and LTI Mindtree, however, they will be removed from Nifty 50 index after the revision. Keep an eye out on this. There will be several others also which we've highlighted in our several other videos also on the platform for you viewers. You can take that list and note it down, the key additions and the deletions that you need to notice as far as the adjustment is concerned. IT stocks will be in focus today. Remember, Accenture has raised its revenue guidance for FY25 to 3 to 6%, exceeding the previous guidance as well. IT stocks in India will be indefinitely focused. Despite a challenging FY24, the company has also reported a revenue increase to $64.9 billion, and the strong momentum in Gen AI with $3 billion of new bookings coming in also increases the hopes for the domestic IT firms and the earnings that we will be tracking from October 10th onwards. Now, there are some QIPs that we have been tracking. Fundraise, Punjab National Bank closed its QIP with an issue price of 103.75 rupees per share, a discount of 5% to the floor price. KEC International raised 870 crores via QIP2 and issued 91.1 lakh shares at 955 rupees per share. Torrent Pharma isn't going to be in focus. Remember, we've been talking about the entire pharma space because of those 53 drugs that were put under the failed quality tests. So, drug maker has now refused the claims of Shellcal 500, alleging failing CDSCO quality test, saying that the sample seized by the regulator is not matured by the company and is non-genuine and spurious as well. Now, Indian Bank will also be in focus. The company has approved raising additional long-term infra bonds aggregating to 5,000 crores over and above the 5,000 crores that have already been raised in the current fiscal. Escorts Kubota will be in focus. Its unit, Escorts Kubota Finance, has received RBI certification to begin the NBFC business as well. Lemon Tree will be in focus. The company has signed a pact for 74-room property in Gujarat, and Ola Electric will also be in focus. The company has announced plans to open 10,000 sales and service outlets by the end of 2025. Targeting expansion in smaller cities particularly, the company has already onboarded 625 partners, aims to reach 1,000 by the festive season as well. Bama Lorry will be in focus. The company plans to invest 700 crores to achieve revenue target of 6,000 crores by 2030. And RITES will be in focus. A RITES consortium has emerged as the lowest bidder for a project worth 87.5 crores from DMRC, that's Delhi Metro Rail Corporation. The project involves retrofit work of DMRC, and we are seeing this is for about 42.9 odd crore rupees, the order coming into his way. So those are some of the stocks that I'm looking at, Shail.
Sakshi, just one point that I'd like to mention on the S&P 500. On a
Yeah.
year-to-date basis, this widest index that is there on the US market on Wall Street is up 20%, 20.4% to be precise. They are having a fight. Nifty 50 is up 20.6%, and S&P 500 is up 20.5%. Now, what is the interesting part? In the 9 months that have lapsed so far, Sakshi, the S&P 500 has hit 42 record highs. So
Wow.
if you presume that there are 252 trading days in 1 year, so 9 months would mean, 75% of that, let's just say 160. And out of 160 sessions, 42 have ended on record highs. And this is when everybody is talking about a recession in the US. So all I'm trying to say, ladies and gentlemen, if you are able to avoid the noise in the market, stick to quality, buy and hold, then you have the game in your favor. And this game is going to get better and better. Today, we are fortunate that we'll be joined by Mr. Mayuresh Joshi, Head of Research at William O'Neill India, and Mitesh Panchal shortly on the technical side. But as I have said, these are great goings. And Sakshi and I will be discussing on Monday two funds, two large cap focused funds that you need to keep in your portfolio to ride this rally. If you have them, wonderful. If you don't, then we'll start a thick investment immediately. And of course, remain in it as far as the long term is concerned. I'll also like to show you the Nifty small cap index. This, Sakshi, is the sector rotation that I'm talking about, down for 3 consecutive days in a month for the last 3 sessions. And this is what needs to be kept in mind. The focus now, ladies and gentlemen, is large caps. HDFC Bank, Lever, ITC, Kotak Mahindra Bank, Bajaj Twins, auto stocks. All the components of the Nifty are now in focus. What is time to book profit out of or partial profit out of is the small cap index, the mid cap index. Both of them have underperformed the Sensex and the Nifty and the Bank Nifty by a very, very large measure. Sakshi.
Absolutely. You know what we'll do? We'll also look at some of the brokerage houses reports that we need to track as well for our viewers. First up, I'm looking at the pharma space, as I have highlighted before too. UBS has come out with a report. They have said that they prefer Sun Pharma with a buy rating and a target price of 2450. Their expected patented molecules are expected to double in revenue over next 4 years, and the margins to expand by 650 basis points for overall EPS CAGR of 19%. They also like Cipla, buy rating here and a 2060 target price. They believe there is a US upside from injectable and respiratory portfolio, which is not yet fully priced into the stock too. So those are the 2 stocks they are looking at. Again, on the metal space, CLSA has come out with a report. They believe Indian mills are well placed for a demand-driven upcycle. They also assume strong demand-driven cycle would be highest upside for Vedanta, a 24% expansion. They believe Tata Steel about a 19%, Hindalco about a 16%. They prefer these ally plays, but they also see near-term support for these ferrous names as well. Then apart from this, we also have a report on SBI cards by Morgan Stanley, an equal weight rating here with a target price of 745. They believe the company's August spending market share has risen by 18 basis points month on month. On a year-on-year basis, however, spending has fallen by 3%, lower than the 13% for the industry, reflecting continued impact beginning February of the RBI's notification on corporate card spending as well. On the power space, Morgan Stanley has double upgraded Tata Power and Torrent Power to overweight. BHEL has been upgraded to overweight as well. However, they have downgraded Suzlon Power Grid to equal weight rating, and NTPC they maintain an overweight rating as well. On HDFC Bank, UBS has come out with a report. It is their top pick in the private banking space. They have a buy rating here. They have revised the target price for HDFC Bank to 2100 from 1900 earlier. The risk reward according to them is favorable at 2.1 times FY26 estimated price to book value for the core bank. They also believe retail deposits and NIM progression will be the key catalysts for the growth going forward. Deposit growth and NIM trends they also believe will be the key signposts for the potential stock re-rating going forward. On ICICI Bank, UBS has maintained a buy but has also revised the price target to 1575 from 1300 earlier, again an upgrade there. They believe it's a steady performance which will continue to support premium valuations for the bank. Growth is likely to moderate in near term. They expect margin compression for ICICI to be relatively modest, but better asset quality and high provisions will be the buffer right there. On MapMy India, Goldman Sachs has come out with a report, a buy rating with a 40% upside to their 12-month target price of 2900. They believe the company is on track to deliver 35 to 40% revenue CAGR targets, bolstered by strong order book, which is almost 4 times the company's current annual revenue run rates as well. So those are some of the brokerage houses reports I'm tracking, Shail.
Well, Sakshi, it's a huge list. And, on a daily basis, your and my workload keeps on getting increased for two reasons. And let's get Mayuresh in the conversation. By the time Mayuresh is in front of the screen, the PCR will also fire the chart of Bikaji Foods. 978 record high, Mayuresh, a very warm welcome. And what a wonderful time to be here in the markets. Uh, it's just a blowout. Yesterday's close on the Nifty because of long positions, because of excessive short covering, probably killed all the bears on the last street. How do you feel and where are we headed?
Momentum for the market just continues unabated. Global cues have been supportive with the Fed rate cut. The MSCI rebalancing, the FI money also has started coming in thick and fast. Domestic liquidity remains extremely strong. And therefore, I think this liquidity-driven rally continues and the momentum shall continue, in my opinion, as well. Obviously, I think the triggers for a structural downside seems to be very limited at this point of time. Shells on both macros and micros. Obviously, the only macro concern that remains is how geopolitics will probably play out. But the market is taking that in its stride as well. And the expectations in terms of corporate earnings steadying itself over the next couple of quarters. And thereafter, over the next 18 months, expected to grow at a decent clip again, anywhere between the 12 to 14% range, is probably also giving fuel to fire in terms of the premium valuations that India is probably having. The China stimulus yesterday and the expectations in terms of some recovery in the Chinese economy, I think those data points will need to be mapped very carefully over the next few months as well, whether there is a genuine recovery happening in the Chinese markets at this juncture. Because the Chinese market at this juncture are not only the cheapest markets globally, but also markets where FI ownership is at the lowest. So I think these data points need to be mapped, but at least at this juncture, I think the momentum and enthusiasm for our markets might very well continue.
Okay. Very good morning to you, Mayuresh. So good to have you with us. The festive spirit is getting soon into the air. Tell us, what is on your radar? How are you going to be celebrating? And any new additions that you are doing to your portfolios too for the festivities?
Yeah, so if I say that have less sweets, Chelsea will say you recommend Bikaji and ask people not to have more sweets. The festive season around the corner, and Sweet, namkeen, shopping, clothes, apparel, I think it's all in the air. So I think once the Shraddh season is over, I've already got requests from a lot of friends for Navratri as well. So
Yeah.
Garba is be hot all across the country. So yeah, I think festive season truly and spiritedly on at this juncture. So consumer discretionary as a theme, as I've always said, is going to do very, very well in the Indian context, not just for the next year or two, or the next decade as well. What we probably like are a couple of stocks which we have kept on our radar, Sakshi. One is JSW Infrastructure. We are mapping these stocks from a key pivot level because at market swing we watch both the fundamentals as well as entry points. So I think 355, 360 for JSW Infra is something that those levels that we are wanting and expecting if the stock reaches can create huge momentum. Um, Beautiful story. 170 MTPA is their capacity. They're expecting to increase their capacity 2.5 times to 400 MTPA, both in terms of greenfield and brownfield expansion across their ports over the next 5 to 6 years. And therefore, by 530, their expectation is to reach 400 MTPA. Cash rich balance sheet at this juncture, almost 200 crores in terms of cash. The capex that will happen for these expansions are expected to happen in a very, very calibrated manner. And therefore, expectations in terms of how the cargo load is also expected to carry around. A large part of their business was heavy lifting by JSW almost a few quarters back, which was almost 65, 70 odd percent. That's become almost 50%. So third-party volumes have started aiding the overall volume growth itself. Their presence both on the western and the eastern ports are going to have a huge say as far as numbers are concerned. Uh, Expecting decent amount of growth, top line growth in double digits, expecting margins to actually improve going forward as well, and with the balance sheet health, along with the entire story in terms of mechanization of ports, which again is a very, very interesting macro fact. You've got almost 12 major ports, 200 minor ports in India, which have a capacity of almost 5,600 odd MTPA. Out of that, 12 major ports have a carrying capacity of 4,500 MTPA. So, to that extent, these smaller ports are good targets for acquisition where some element of capex done and you can actually increase the capacity. You can utilize them efficiently enough to increase your presence in terms of the overall trade as well. So I think this is one interesting bet that we are probably looking at in terms of our watch list. Another one is Subros, where our belief is that from 1st October, where AC cables and AC systems in trucks and MHCV vehicles will get mandatory, is going to have a huge impact. They already have a market leadership position. Localization has improved significantly. They're now almost 80 to 85% in terms of localization, which reduces their overall impact on margins. And therefore, margin improvement is a given for a company like Subros. So the other element, obviously, is also the electric vehicle. And they're foraying big time into that, where the content per vehicle or the content pack might actually increase by 50,000 to a lakh of rupees, which will also aid not just volumes, top line growth with better margins, creating huge amount of operating leverage. Very, very strong balance sheet, strong pedigree as far as the management is concerned. And therefore, the ROEs that we target 17.5% at markets with India, the company is probably ensuring that it not just fulfills it, but quantifies and quadruples, I mean, and multiplies and amplifies it as we head into the next few quarters. So I think these couple of stocks probably look interesting to us at least.
Well, Subros is owned by the Suri family, and the two brothers put together are therefore Subros. And this, ladies and gentlemen, is India's largest maker of car air conditioners, and of course started work with Maruti way about 40, 45 years ago. And it's progressed beyond the pale and has sort of given a lot of hope to a lot of players. You will be surprised to know, Mayuresh, when Maruti was launched in 1987-88, just 5% of Maruti volumes were air conditioned. The price difference was just 5,000 rupees.
Oh,
1 lakh
okay.
rupee, 1 lakh rupee for bare Maruti, and 1 lakh 3,000, 1 lakh 4,000 for an air conditioned Maruti. Those were lovely days. And uh, I still remember Maruti getting listed at 140 rupees. It is at
Yes.
13,400 rupees now. And one more word on JSW Infra. Ladies and gentlemen, this is a newly minted counter. It got listed in October 2023. So we don't have much of price history. The IPO price was 119, got listed at 143, and now you have 341 on the board. With that, ladies and gentlemen, let's begin Friday. A bit of a back foot, nothing to be worried about. The Nifty went back in the green, 29 points higher, 26 to 53. Mayuresh, no matter how much caution Sakshi and I want to inject in our conversation for people to have some kind of sanity, the market repeatedly makes a fool of us, but it's okay. One has to be doing one's job, even if the market is not listening. And I'm very happy it's not listening. Okay. The rally, ladies and gentlemen, today is led by TCS, the big boy. 32 rupees higher, 43.25. Infosys in the green, 30 bucks higher. No stopping Bajaj Finance. 7,800 now. The biggest festive season is upon us. Therefore, financing of consumer goods will be at its peak. The rally in ICICI gets better. 15 points higher, 1344. This is a record high. Now let's look at what the big daddy is doing. HDFC Bank a bit quiet, 13 rupees lower, 1771. Okay, we'll take it. It's rallied for 8 sessions in a row. A bit of profit booking is fine. I want to see how auto stocks are doing for two reasons. One, we are sitting on the penultimate session for September. So we'll be looking at all auto stocks on Tuesday because the monthly numbers will be coming in. And in any case, it's been a great run up. Hero Motors, 6,076, 0.5% higher. Tata Motors, 0.5% higher. Aisha Bharat Forge, Tata Motors, all of them in the green. This is looking exciting as far as autos concerned. Remember, they are the top performing sector on the Nifty in the month of September. A very quick look at what's buzzing on the metal space. Well, another fresh high on Hindalco, 2.6% higher, 750. You have a strong move coming into Sun Pharma, another 0.5% higher. Remember, it's the quietest stock on the Nifty and still making very good record highs on a consistent basis. IT all the way, emphasis 3.5% higher, 3159. Again, the interest rate cut theme. Therefore, you have Lodha developers from the real estate space, 3% higher, 1425. We'll wait for these prices to settle. The Nifty is back in the green, 40 points higher, 26 265. Mayuresh, the two big ones, those stocks that haven't come up with anything for the last 3-4 years, HDFC Bank and Kotak Bank. How do you see them performing from now onwards? Is the worst behind us, or can there be more hurdles?
So two parts to your question. One, in terms of the entire system, which includes HDFC and Kotak Bank being large behemoths themselves, how deposit mobilization trends will take place is going to be extremely critical for the overall health of the system as a whole. So at this juncture, we are quite okay. The deposit growth overall last year also has been quite decent enough. It has lagged advances growth to a tad bit. But the fear is that with the diversion that is probably happening, and it's not purely that deposits are probably going into mutual funds as a whole. I think the incremental advances growth should probably exceed deposit growth. And therefore, how the banking system will cope up with this is going to be extremely critical. Second, I think in terms of expectations of deposit mobilization, in a scenario where you're probably now looking at the bankers cutting interest rates, where RBI will also follow suit at some point of time, you're obviously going to see a scenario where the rate cut cycle will lead to lower costs as far as advances is concerned. And therefore, how do they manage to take deposit growth along with that? Do they have some tenor increases, long-term tenor increases? Do they take bulk deposits at greater rates? Is something to be seen. The third element, obviously, is the overall cost of borrowing. Do they resort to CPs or CDs in terms of their overall borrowing mix and increase that by as a percentage of the overall proportion of bank borrowings? Might take sheen off in terms of NIMs and spreads as well. So I think there is going to be an adjustment factor, Shelter, as far as the banking system is concerned. And therefore, markets might also adjust if these factors take place in terms of forward annualized numbers. At some point of time, obviously, I think it will normalize itself. And therefore, I think banking as a system or banking as a sector should do well over a longer period of time. HDFC Bank has done reasonably well over the past few months. My own sense is that both these banks might consolidate at this juncture, but there will be good opportunities that will come through if any of these factors come in play over the next few months for both these banks as a part of the BFSI space.
Okay, got it. Well, let's also welcome on the show Mitesh Panchal, who will be tracking the technicals for us. Warm welcome to you, Mr. Panchal. Great to have you after a long haul. Tell us, after the 26,000 levels, 26,200, 26,250 levels, how are you looking at the Nifty now? And any key stocks that you've added in the recent rally?
Good morning, Sakshi ji. Good morning, Shail Good morning, Mahesh ji. Basically, now the numbers we need to count, Sakshi, on the upside. So let's work on the downside. And the best strategy to work on the downside is nothing but the trailing stop loss. So what we are working with is last week's low as our trailing stop loss in all the indices and in all the stocks. So that is the best strategy to play in this market. There are times where logic will not work. There are times where chart will not work. Honestly speaking, after 20 years of an experience in this industry, you just need to stay with the trend, and this is the market where you just need to stay with the trend. So we are of the view that let's not, press too hard on judging whether 27,500 is on the card or 2600, 500, 26,500 is on the card, or whether Bank Nifty will outperform Nifty or Nifty will outperform Bank Nifty. The simple solution in the existing euphoric market is be disciplined, uh, follow a strict stop loss, and the stop loss policy is nothing but your trailing stop loss. And if possible, sit on the cash, because ultimately in such euphoric market, cash eventually will act as one of the biggest asset class and will probably help in generating more alpha rather than chasing alpha right now. So we are actually working with these kind of some basic methods right now, which might not go alone with the market themes, but that is how we are placed right now.
Okay. Namaste, Mitesh ji. A very warm welcome to you, sir, and greetings for the festive season, which is now upon us. I wanted to understand the last two stocks that you have advised your clientele to buy on a medium-term basis based on chart strength on the long side, and maybe some exits that you've pointed out may work better.
See, two stocks from the same group is now looking attractive. First is Adani Enterprise. After a long pause and a consolidation, if you look at the chart pattern of Adani Enterprise, it has not participated. In fact, it has not crossed its recent high of 3,283, which it has formed on 1st of August 2024. So this is the counter which is looking very promising to us, and probably sooner than later, the counter will surprise. Within the same group, I think Ambuja Cement is also looking promising. In fact, cement space entire is looking very promising from a technical perspective. So if you look at the chart pattern of, again, Ambuja Cement, it has not been able to cross its recent high, which it has made on 23rd of August 2024, that is of 659. So we are of the view that technically it is advisable to go long in these two stocks, Adani Enterprise and Ambuja Cement. As far as the profit booking message or probably exit is concerned, I think by and large, PSU has given us a bit of a hint or an indication that now one need to be cautious in that space. So I think we are advising our clients that wherever you are sitting on a very good profit as far as PSU theme is concerned, advisable to book profit, not to venture into it. So we have a contra call right now as far as all the PSU stocks are concerned, barring PSU Bank. We are not advising clients to buy the dips. On the contrary, we are advising the clients that if you miss to sell at the higher level, probably you have to compromise a bit on your existing profits, but advisable to book the profit and exit this entire PSU rally.
Okay, got it. Well, the Nifty seems to be settling in the pre-opening trade, 26,248 odd levels. So just below that all-time high of 26,250. IT seems to be the flavor of the day, 1.3% higher for the index. And this is largely to also do with the sentiment booster that Accenture has provided with its revenue guidance raise also. Metals seem to be in the thick of action, 0.7% higher. Consumer durables, PSU banks, oil and gas, these stocks seem to be in the up and about zone. Let's actually get Mayuresh to talk about the IT space as a whole. Among the top 6 movers on the Nifty, you will find 5 of them within the IT space today. How would you really look at the IT pack now? Within about 10-12 days odd, we will start tracking the earnings back home too. What should one do here, Mayuresh?
So Accenture has definitely boosted the moves that you're seeing, Sakshi, on the sector as a whole. Obviously, I think mid-cap has outperformed large cap for a large periodicity of time, and the expectation largely getting baked in is with management commentaries that we've heard so far, pricing remaining in favor of mid-cap IT companies or the sector as a whole in general for the broader universe. Constant currency growth expected to remain stable, margins expected to remain stable as well. Valuations and price action might get ignored at this juncture. The other element obviously is from a valuation perspective, even large cap IT companies actually are not cheap any longer, and therefore earnings is going to be very, very critical. So I think you have to probably map how large cap IT companies' earnings will play out and how mid cap IT companies' earnings will play out. Mid cap IT companies earnings might be far more stable, looking at what we probably heard in the quarter gone by. Large cap might still have some element of teething issues selectively within each company itself. And therefore, I think if there is some element of earnings, you've seen reactions that happen on IT stocks. So I think mid-cap IT outperformance might very well continue, is what our take is. We continue holding stocks like a Coforge and a Persistent, but again, a very, very clear disclaimer. These stocks in our global portfolios, we have probably bought into these at very, very low levels.
Fair point. That's a good explanation as to where IT is headed. Mayuresh, coming to the PSU pack, and of course, it's visible that there is pain all around, and nobody's picking up the baton any longer. None of the traders are interested. Investors seem to have found newer and better and greener pastures. Mitesh's comment that he makes that you need to probably trim your expectations from now on in terms of rise. How do you explain this, how should I say, weakness that we are seeing persisting for 6 months? And what are the 4 or 5 stocks you feel should be purchased in this weakness in a piecemeal fashion? 1 year from now, they may give fabulous returns.
So again, Shail sir, our take is that the rally was exorbitant for most PSU stocks, and therefore I think taking some money off was something that we mandated a couple of months back. Having said that, I think a couple of spaces, I think the entire tailwind still exists. So whether it's PSU defense, whether it's PSU power, whether you're talking about PSU utilities as well, and therefore I think power as a space where I think the government focus is going to be multifold in terms of not just capex, but in terms of ensuring that the implementation probably happens to get to that target of 500 gigawatts by 2032 is going to be a very, very interesting space. And therefore, the entire power ecosystem, whether you're talking about generators or transmitters or EPC players, are going to come into foray over the next few quarters and next few years. Execution risk might exist, and that is the only probable risk for PSU entities at this juncture. But if they're able to execute well, and as the cycle is evolving and the ecosystem is evolving, my own sense is that PSU power, transmitters, generators, and utilities, so including the likes of Power Grid, including the likes of NTPC, you're probably looking at some financiers, you're probably looking at some EPC players within the space as well. Any declines on these counters probably become good opportunities to probably start creating branches into these stocks. We spoke about banks, and therefore I think in the next few months, if you get opportunities within the PSU banking space, I think those can be good opportunities as well. A couple of stocks that we, again, as a disclaimer, roll in our global portfolio, Bank of Maharashtra and SBI, again in tranches over the next few months, if somebody can accumulate. I think valuations in your favor and expectations in terms of the entire cycle where BFSI is going to play a pivotal role in India's growth, will get played out as well with PSU.
Okay, ladies and gentlemen, the prices are upon us. We start the end of this week on a slightly back foot, but nothing to be worried about. This is a market that rebounds very, very sharply. So let's look at the winners. I think I'll start with the IT index, 800 points higher, 750 points higher, 42,909. It's taking it away. TCS, 51 rupees higher, 43.44. Infosys, 38 rupees higher, 19.37. I'll request Mitesh ji to be ready with his top pick in the IT space. This gap up looks very, very interesting. Let's look at what's happening on other stocks. You have profit booking across the board. Hindustan Bank, HDFC Bank is down 6 rupees, 1778. L&T down 45 rupees. ITC down 1.5 rupees. Axis is 5 rupees lower. Reliance flat at 29.93. Kotak is a rupee lower, now flat almost 1901. SBI in the green, 2.5 rupees higher. This is good. Tata Motors, 5 rupees higher. Mitesh, coming to you very quickly, your top pick in the IT space and your very quick view on Tata Motors.
So the topic, as far as the topic goes, I think Coforge is looking pretty interesting in the early hours. So 7060 is where the future is traded. I think one should go long with a stop of 7,000 for the potential target of 7150, 7200. And as far as Tata Motor is concerned, yes, as a disclaimer, yesterday we have initiated a buy call in the stock. So our clients might hold a direct or indirect position into that. As of now, for the very first time in a short period of time, the stock is now trading above 1,000. So probably, Shailji, today we can expect 1,020, 1,030 on the upside. Stop should be at 990.
Okay, I'll just mark the record highs that have come in the market. Sun Pharma. This one is for you, Mitesh. Again, what are the charts of Sun Pharma telling you? We'll just come back to you in a while. And Tata Power. These are the two stocks that are now taking it away. And of course, if Mayuresh is here, why will Bikaji Foods not go up? 0.5% higher, fresh record high, 984. Sun Pharma and Tata Power for you, Mitesh. What are the charts telling you?
Slowly and steadily, Shailji, from the level of 1,587, that is on 22nd of July 2024 close, stock is building. Sun Pharma is building a base, and it is, I mean, firmly forming a high bottom formation both on the weekly and the monthly chart. So the chart structure is pretty strong. What we are looking at it is around now 2000, 2100 kind of a level. So as far as Sun Pharma is concerned, one should put a stop at 1800 and can eye at 2100 as the first target. As far as Tata Power is concerned, after spending a quality time in the consolidation, the stock has hit its recent high on 2nd of August 2024 at 471. After that, it has corrected, and now stock is well placed above that level. So what we are expecting in Tata Power is a range of around 510 to 520. So with a stop of 460, one can go long for a target of 510 and 520.
Okay, so remember viewers, I had marked that UBS has come out with a target of Sun Pharma of 2440, where they expect patented molecules to double in revenue in 4 years. That's probably one of the key triggers. And on Tata Power, Morgan Stanley has double upgraded the stock as well. Those are the two brokerage houses reports we had marked. Apart from this, Shail, interestingly, you talk about Bikaji Foods. Pratap Snacks is also up by 5%, and we all know that how Autumn Investment and Mahikela are looking to acquire controlling stake here as well. So let's actually get in Mayuresh to help us understand, what's going to be taking place within this entire snack space. Bikaji Foods, you've been talking about since a very long time on our channel. It's been one of your top picks. Do you think the street is getting ready for more mergers, acquisitions to follow soon? And will this get this entire space also in action right ahead of the festivities then?
Quite possible. And we've also heard, Sakshi, about the kind of valuations that Haldiram is expected to get, right? And therefore, I think this entire space and organized players might actually start eating into the pie of a lot of unorganized players. The other element that is probably also happening from a macro perspective is with a lot of GST compliances that are probably increasing, e-way bills and monitoring of that aspect. I think a lot of the unorganized players are finding it a little bit more difficult to carry on their operations in a far more systematic manner. And therefore, I think the kind of market that India probably has, with the organized players increasing their spread across the length and breadth of the country, and macros as a tailwind also aiding them from a regulatory perspective, I think there is still good enough space for these guys to actually grow overall in a market like India over the next few years.
Okay, and let's get Mitesh here into the conversation since we are talking about, festivities also. Do you prefer sweets or do you prefer savory snacks, Mitesh ji? And therefore, would you be looking at snack makers like Bikaji, Pratap Snacks, Gopal Snacks, or would you be looking at the sugar stocks which are also in the sweetest spot today? Balrampur Chini, Awadh Sugar, Ugar Sugar, these are all the stocks that are up 5, 6, 7% all in trade today. So both sweets and savory, it's a tough choice to make.
Absolutely. So I think sugar is where we have already issued a report, so we are bullish on that space. Apart from that, from the snakes segment, what is looking interesting is Gopal Snakes. I think the stock is now successfully trading above its post kind of uh, just hold on. Yeah, post IPO listing. IPOs listed, and after that, it has made a high of 392.85 on 15th of March 2024. Post that, the stock went for a toss and a correction, and now the stock is trading well above that level. So I think Gopal is looking pretty interesting from the current level. What we are looking at is around 480 to 500 levels at the current level. So probably with a stop of 380, one should go long with a target of 480 to 500.
Okay, one of the interesting stocks that has made a comeback is the Elecon Engineering, now 703 rupees, about 0.2% higher. We need to keep this one in mind because the capital goods cycle is coming back. Remember, just 2, 3 days ago, the government announced that it will spend 9.2 lakh crore rupees into transmission and power sector of electricity consumption over the next 6 years. 6 years. Therefore, you see a very, very sharp rally coming back into ABB, Siemens, Schneider, and the entire cable space. Keep an eye out on Elecon Engineering. Mayuresh, your view on Elecon, if you track it, and then Miteshji will give a chart check.
It has been a solid story, and the guidance that they've given Shell sir for each of the past 2 financial years, they've actually met their guidance quite comfortably. Now they're looking at tremendous amount of growth even in the next couple of years, and therefore the expectation in terms of how their entire balance sheet dynamics are expected to grow, EPS is expected to grow even at a faster pace. I think that is giving fillip to a counter like Elecon Engineering. So yeah, anybody holding on to this counter should continue.
Miteshji, your view on Elecon?
Yes, after the recent corporate action dated to 19th of July 2024, the stock went for a quality consolidation and spent close to more than 2 months in the consolidation zone. Since last 4 trading sessions, now the activity is picking up. So from the level of 640 onwards, the stock is picking up space both on the volume front as far as and the price front as well. So we are of the view that yes, now the stock is heading for a new all-time high. The recent all-time high was 716. So probably what we are looking at it is around 780 to 820 levels on the upside. So if you have, you can hold it. Even you can buy at the current level with a stop of 680 for the potential target of 780 and 820 in the next 10 to 15 trading sessions.
Okay, got it. Mayurish, let's get you to talk about the metal space, which has been continuously in the thick of action, of course, with the China stimulus package. Back home also, the stocks are actually moving up now with the demand probably improving there in the biggest market in the world. How are you looking at the metal story unfold? Do you think there is some structural story that is in the works?
So the stimulus has worked, and the announcements thereof made by China is creating the sentimental impact that is needed for metal stocks. So two things in favor and one thing against it very, very quickly. One, in the cons for metal stocks, again, is going to be the China recovery, which is really, really circumspect at this juncture. The biggest consumers in the processor of all metals, whether it's ferrous or non-ferrous, and Chinese economy, how the real estate market probably evolves, is going to be extremely critical. So I think the Chinese recovery is going to be a testament in terms of the metals recovery overall over the next few months and quarters. The second element is because of a frail Chinese recovery and because of their factories probably dumping in a lot of their inventory globally. What you're probably seeing is LME prices have remained very, very depressed. The only factor that probably works in favor is global demand coming back slowly and steadily, expectations of China recovering, and Indian context remaining strong. along with inventory levels across metals remaining extremely low. So any kind of demand uptick which starts coming through and restocking which starts happening will pull up LME prices, which will create a huge multiplier effect on a lot of metal stocks across the globe. Having said that, HRC, CRC prices as far as steel is concerned are still low. Expectations of some element of genuine recovery happening in non-ferrous, specifically in terms of aluminum and lead, is something that the market probably believes in. And therefore, at this juncture, a large part of the skew is probably happening towards non-ferrous, specifically towards aluminum stocks.
What we'll do is we'll do a bit of market spotting now that the first 10 minutes have lapsed. The Nifty is in the green, 26 to 88. Not only does it start a fresh October expiry, it gets into the festive season with great gusto. And this is absolutely the right time to go to Mitesh and take his view on the auto space. Mitesh, first and foremost, we'll talk about Maruti. What are the charts telling you? Is this a percentage point dip, an entry level for people to celebrate further and better prices in Maruti in the medium term? And then we'll get to Mayuresh on the Maruti and Hyundai face-off in the market. But first to you, Mitesh. Maruti.
Yeah, absolutely. I think since last few trading sessions, after forming its recent low on at around 12,170 level, dated 18th of September 2024, there is no looking back. Heart of higher bottom formation with a strong volume is what the chart is indicating, and now the stock is ready to trade. It's an all-time high. So we are of the view that the much awaited breakout took place in this stock after a quality consolidation. The stock has spent a good amount of time in consolidation and now likely to move up. So any dip going forward should be bought into. We are of the view that the target of 15,500 is nearby. So yes, at the current level, one should buy the weakness or the dip in the market for the potential target of 15,500.
You know, Mayuresh, at least my daughter is addicted to K-pop, which is Korean pop. And there used to be this group, I forget, 7 guys in it. Sakshi will, yes, Sakshi is nodding ahead. Sakshi, what's the name?
I don't know. I don't track it very often, but I do know that they were the ones who actually started off the innovation and the kind of, I would say, the culture in India that started off. Everybody started to buy Korean-style clothes in India. Korean-style food and restaurants are on a surge in India. Korean skincare products have also made an invasion into Indian skincare products as well. So there is nowhere, and of course, like you were talking about Shell, we have all the Korean companies now making a beeline to start getting listed on the stock exchanges with Hyundai, and now soon we will have Kia also talking about it as well. So it's a K invasion into India. We really need to be protective of our Indian stars right there, Indian musicians.
So दोनों भाई साहब and Sakshi, हमारे यहाँ उन वो K-pop stars का
I think it
बर्थडे
was
भी
called
बनता है.
BTS, if I'm not wrong. It was called
अभी
BTS.
जब कोविड के टाइम I was made to learn all the 7 names of the gentlemen. So I have had terrible times. But coming back to the main thrust. Mayuresh, Maruti, for 2 reasons. Hyundai is getting listed. This will be an offer for sale for about 25,000 crore rupees. Maybe 3 months from now, it will be listed. I just wanted to understand this rub-off that will happen on Maruti over the next maybe 2-3 months. What do you think are the positives as far as Maruti is concerned? And is there a note of caution you may want to inject because buyers such as Sakshi, they are only looking for SUVs now. They are not buying entry-level hatchbacks like me.
No, I think point is very, very valid, Shail sir. And the aspect that Maruti is now trying to probably do is regain their market share in most categories that they operate out of. And they know where their strengths are, right? Entry-level cars, mid-segment cars is where their strength is, but they've also forayed into premium SUVs as well. So to that extent, I think the acceptance that has probably happened, and again, Maruti as a brand in India Sasta, tikau, and reliable. I think these three factors play a very important role in the Indian context. And we Indians are also very, very sensitive when it comes to resale of cars. And Maruti gives best value of money when there is a resale of car element as well. Obviously, their touch points, their distribution network, and their servicing elements, where servicing parts are not very, very expensive compared to a lot of these premium cars, also become a buying factor. Obviously, I think the premium element, and there is a totally different market for that. And therefore, I think there will be certain buyers who will be those niche buyers for those premium cars as well. For the larger market to evolve, if you look at the ownership statistics, Indians still have under ownership as far as four-wheelers are concerned. And as our discretionary patterns and our per capita starts increasing, I'm pretty sure that Maruti's overall fervor will remain in the larger parts of hinterland, both in terms of entry points as well as all the aspects that I spoke about. Hyundai's entry probably creates some element of a sentiment in terms of how markets might react to the stock. But overall, in terms of market leadership, in terms of overall stability in numbers, I think Maruti is still the stock to go to. So anybody holding on should still continue holding on.
Okay, got it. Let's also discuss the two-wheelers in the same breath as well. Those were the ones that were, I think, in the last 1 or 2 months, the talk of the town, be it Bajaj Auto, be it, Ola Electric. That is something that we have already discussed in the past month as well. But what goes forward from here? Let's get in Mitesh also into the conversation. Mitesh, four-wheelers versus two-wheelers. Where do you find greater momentum in the festive season? People will be buying with full force. I'm sure discounting is also at a peak now.
Yeah, Sakshi, the comparison is fair. I think technically what is looking more promising beyond four-wheeler and two-wheeler is the entire tire space. So let's talk about the two-wheeler first. I think Ola Electrical is where the stock is forming a consolidation between 100 on the downside and 108 on the upside. So when it crosses 108, probably we will see a strong up move towards 130, 140. But within the entire tire space, what is looking more promising is Apollo Tire. So if you look at the chart pattern of Apollo Tire, recently it has made a high of 568 dated 30th of July 2024. Post that, it had a very sharp correction to the tune of 477. Then it went for a consolidation, and since last 3 trading sessions, stock with volume is forming higher top, higher bottom formation. And yesterday also the stock has posted a very strong gain and managed to cross its recent high of 568. Yesterday's high was 584. We are of the view that as far as the entire tire space is concerned, going forward, Apollo Tire will be an outperformer. With a stop of 550, one can go long for a potential target of 600 and 620.
Okay. So that's as far as the two-wheelers and the auto ancillary space is concerned as well. Another theme that will be in the works in the festive season is the gems and the jewelry space. We've already seen a lot of traction in this space because of the gold prices, hitting record highs. Yesterday, even silver hit a 12-year high as well. So this is the space that is in the thickest of action. Mayuresh, the jewelry companies, the gold financiers, what would you be really looking at in this festive season, or maybe physical gold and silver?
Actually, I hope you've done your shopping because gold prices are just not coming down, right? Yes, I think the expectations in terms of how gold prices are expected to evolve, I think they would remain on a steady state basis going forward as well. The wedding season is around the corner as well. And therefore, I think wedding jewelry makers are going to be extremely are going to remain in focus, both in terms of wedding jewelry as far as gold is concerned, as studded jewelry as far as diamonds is concerned as well. So yeah, stocks like Kalyan, Senco can continue doing well. You've also seen the smaller players like a TVZ, TC Jewelers do well as well. Titan has probably lagged because I think a large part of their proportion in terms of gold jewelry is not skewed towards wedding jewelry. Obviously, they are making their portfolio in that respect far more bigger. But again, I think like the organized, unorganized story as well, organized players are going to benefit significantly over the next few years. And therefore, these players should remain in focus. So you just spoke about silver, Sakshi. I think there is a very interesting note that I was reading in terms of the silver to gold ratio with gold standards that were tweaked in 1934 and Roosevelt then tweaked it again, so on and so forth. I think it has hit an all-time low, and therefore there is some bullish view that is probably coming back to silver as well. And therefore, I think a lot of these industrial commodities or companies which produce silver. I'm not putting the names for compliance reasons. That can be kept on your radar as well. But having said that, I think gold financiers, I was going through Muthoot and Manappuram's annual reports as well a few days back. The management sound very, very hopeful. Obviously, the growth that they've probably seen is pretty much on track. The expectations in terms with gold prices moving up, the loan to value actually moves in their favor, and therefore incremental loans that have probably been disbursed, specifically in the case of Muthoot and the gold AUM, which has remained steady state. With banks also now laying focus on their core operations and not on the gold jewelry business like we saw a few years back, might give some element of impetus or stability. Well, so yeah, very, very interesting space as a company.
You know, Mayuresh and Mitesh bhai, the problem, the crisis is of plenty in this kind of a market.
Yeah.
No matter where you look, you will
Yeah.
find a quality batch of stocks, alluring you to move towards them. And it becomes very, very difficult to keep your sanity. Look at how gold has moved. I mean, just a month ago, it was $2,300 an ounce. Senco was in three digits. Now it's at 1485. Look at how Sky Gold, Goldiam International, how they have moved. I mean, it becomes a little difficult when you're not chasing momentum. And the worst comes after you've chased momentum because the stocks pause. It's a fact. Sakshi, every
Yes,
day
I
I
know.
listen to 4 or 5 people who call me up and say कि भाई हमने तो ये लिया था, ये तो चल नहीं रहा और पूरा बाजार चले जा रहा है.
It's true.
Yesterday, look at how Nifty moved. This is after a 4% rally in September.
Yes.
कल Sakshi and Mayuresh ji and Mitesh ji in particular will confirm that there are people crying
Yeah.
on yesterday evening because they went
Short
short
sell.
on
Yeah.
and now they have no delivery to give, and it's such a major crisis that in a visible, most obvious bull market, people are losing money. How do you explain that to their families? It becomes very difficult. Mitesh ji,
And
what has your experience? Yes, Sakshi, you were saying something.
just 1 second. And Shell, I would like to really invite you on one edition of Daily Calls. There are at least 2 of my regular viewers who come every day and who short on everything which is in the uptrend. And every day they will ask a question on, say, Bajaj Auto short kar liya maine, Maruti short kar liya maine. Everything which is in trend, they will have short sold. So I want you to really come one day, because there is no day when they do not come. So come any day, pick any day, but do come, and I want you to speak to them as well.
मैं मंडे को आपके साथ जुड़ता हूँ एंड आई विल ब्रिंग दैट स्केल. वो जो स्कूल में था ना, वो जो लकड़ी वाला था और नीम की संटी, वो मैं लेके आऊंगा. डोंट वरी, I'll come on 12 o'clock show. Mitesh ji, how are you battling this mad urge to sell this rally?
So let me remind you a classic example of a cricket where in the 1996 there was a Hero Cup, and Anil Kumble and Srinath, Tailenders, came and helped us to win the game. I think both their mothers were also present. And I think we are facing Australia. And Australia has tried best of the best bowler, but somehow they don't understand how Srinath and Javagal Srinath and Anil Kumble help us to win the game. So sometimes if you deploy the best of the best fielders, best of the best bowlers, again the tailenders will do wonders. Such things are happening in this market. And I think in a span of 20 years or probably 10, 15 years, you get a very rare chances to enjoy market like this. So
Yes.
as of now, the best way is to let's enjoy the madness. Let's enjoy the madness. There is a lot learning out of it, believe me. So let us see to it and be a student right now. And since last couple of weeks, Shailji, we are a complete. We have left buying or participating in the market. We are just looking at the movements on a daily basis and try to spend maximum time with our books and in our boardroom about discussing the different scenario and how the index management is helping the indices to sustain at the high level. So advisable to be student right now. This is how we approach the market right now.
मितेश जी, आपने इतना पैसा बना लिया है कि अब आपको कुछ करने की जरूरत ही नहीं है. मैं गलत तो नहीं कह रहा?
नहीं सर, actually, पॉइंट ये है कि सर अगर आपकी जिंदगी की रिक्वायरमेंट बहुत कम होगी ना, तो सर पैसा कितना बनेगा कितना नहीं बनेगा, दैट डजंट मेक मच ऑफ अ डिफरेंस. सर द पॉइंट इज दैट समटाइम वी दैट दिस इज व्हाट वी बिलीव फॉर्मली, कि सर समटाइम्स साइडलाइन में बैठने से ही बहुत बड़ा अल्फा जनरेट होता है, या
ये बात सही
साइलेंटली ऑब्जर्व करने से ही बहुत बड़ा अल्फा जनरेट होता है. ये फिलोसॉफी में हम लोग 2003 से बिलीव कर रहे हैं सर. और बिलीव मी, रादर देन पार्टिसिपेटिंग, नॉन पार्टिसिपेशन हैज हेल्प्ड सो फार in generating alpha for us. That is working for us. Maybe not working for the rest of the people, but yes, that strategy is working for us. So let us be silent and observe the market.
Fair point. In silence lies the greatest of learning. Sakshi is a practitioner, so that much I know, and I've been trying and failing repeatedly. So I must learn with Mitesh, and one of these days I'll come to your office and sit in your boardroom and read all the books, and then say कि अब बताओ मोमेंटम कहाँ चेस करें.
सर मोस्ट वेलकम आपको और साक्षी जी को, क्योंकि यहाँ पे हमारे यहाँ पे मधुबन रिसोर्ट बहुत ही वन ऑफ द फाइनेस्ट रिसोर्ट है. एलिकॉन इंजीनियरिंग का जो आपने जिक्र किया, मेरी ऑफिस जहाँ पे मैं अभी शो कर रहा हूँ, वहां से एलिकॉन इंजीनियरिंग के मैनेजिंग डायरेक्टर का बंगलो सिर्फ 500 मीटर पे है. और ये जो मधुबन रिसोर्ट है वो उन्होंने ही बनाया है. सो इट्स अ फाइनेस्ट प्रॉपर्टी, यू विल एंजॉय सर. प्लीज वार्म वेलकम, कभी भी आओ सर. प्लेजर टू बी विथ यू इन माय ऑफिस सर, एंड यू साक्षी जी एज वेल.
Thank you so
So
much, Mitesh.
we'll make a trip to Ahmedabad and meet Mitesh Bhai shortly. But we have more important tasks now to see that the market ends in positive as far as Friday is concerned. Mitesh ji, this is what I want to sort of understand. See the sector rotation that is happening, and again I'll request the PCR to fire the small cap index and the mid cap index plus the Nifty. Now, how do you foresee the trends unfolding? Is this a time when people will book out of smalls and mids and move money to large caps? Or is this a time when you will have a secular rally till maybe all-time come, and then maybe a fall down? What do you think are the two scenarios? Which one of them will work out?
I think the first scenario will work out, Shailji. The money is moving from mid cap and small cap and going to large cap. And within the large cap, also very selective large cap. If you look at the entire IT space in last 3 months, it is a roller coaster ride. It is not a straight away buy call or a straight away sell call in that particular sector. So we are of the view that yes, money is moving out of the small and mid cap. And one of the most interesting thing right now, which is playing in the market, is that if you really wanted to make money, believe me, Shailji, this is the market which will give you extraordinary short to medium term opportunities rather than long term opportunities. So a swing trade will probably generate more return. A trade with a holding period of 5 days, 7 days will probably generate extraordinary return rather than a trade with a time horizon of 3 or 6 months. So this is a market for those who are actually smart in playing the short or a swing trade, because look at the run in the entire Balrampur Chini, 6.5%. Now I don't remember in last at least 6 or 8 months I have seen such a strong rally in Balrampur Chini like this. Look at the comeback into the entire IT space. Look at the comeback into the stocks like ABFRL. I mean, phenomenal. So if you're holding, if you have a grip on the swing trade, or probably if you'll be able to read kind of a short-term moves precisely, then this is the market for you.
Said. So since you're talking about the swing trade, Mitesh ji, Diwali tak ke liye koi swing trade mein kuch stocks bata dijiye. This is one of the questions that I keep getting even on daily calls. I'm sure they're watching on Market Today as well. Any swing trade stocks that you could talk about till Diwali?
I think three space from the entire PSU basket is looking very interesting from a very short perspective. First is the Duo REC PFC, and second is an NMDC. So I think these three stocks are looking very promising from a swing trade, or perhaps a 10 or 15 kind of a trading horizon kind of a thing. I think both REC and PFC can deliver 10 to 15% return from the current level. Same is the case with NMDC. After spending a quality time, now it's a time for NMDC to post at least a level up to 270, 280. So these are the three trade which you can look for as far as swing trade is concerned.
Okay, REC, PFC and NMDC will continue to keep an our radar, and we will chunk this out for you also viewers to really see till Diwali. In case you're looking at any swing trading opportunities, then this is where you should be looking at. IT remains to be the top spot, 2% higher for the index alone, and there are several stocks that are buzzing. Wipro, Infosys, LTI Mindtree has come back despite looking at the exclusion from the Nifty today. HCL Tech, Mahindra, TCS, they're all up and about. The good part is that the small caps are also now turning green. Remember, when the stock markets on the benchmark level have been hitting 6 days of consecutive highs, the mid and the small caps have actually faltered a bit too, and they have lagged behind. But today, some signs coming back on the small cap space. Where most of the sugar space stocks are actually buzzing here. Sri Renuka Sugar is 5.5% higher. Your Praj Industries, something that Mayuresh has talked about many times on the show too, 3.5% higher for this one. Several other stocks are moving up. But let's also look at what else. MRPL, that's Mangalore Refinery, that's moving. Nalco is moving. Chambal Fertilizers is moving. India Mart Intermesh is moving here. Then you have Tata Teleservices, Zensar Tech, IDFC Limited. These are some of the stocks that are actually buzzing within the small cap space as well. But let's get you to also talk about some FNO movers also. I can see Polycab after a long haul. This stock is showing some signs of a move in the FNO space. How are you looking at Polycab? We've nearly forgotten about it. There was an entire time when this stock was in news, was in action. The way it has rallied in this first part of the year. How would you look at this one?
So it's in a consolidation zone right now, Sakshi, and the stock need to clear the level of 7050. Unless and until if the stock is not crossing that level, probably you won't see a sustainable rally. Probably you will see one day up, another day down. So what we are looking at is 7050 on a weekly basis. If the stock close above 7050, then the upside will open up, and in that case, the first target will be 7350 and 7500 respectively. So wait and watch for 7050. Once the stock close above that level on a weekly basis, yes, it's a clear cut buy for a target of 7500.
Okay, ladies and gentlemen, we've lapsed the first half hour of trade with Nifty in the green. This Sakshi would be, I think, the fifth day of gains. Just let me confirm that. And yes, 1, 2, 3, 4, 5. The sixth day of continuous gains. We started 19th of September. We closed 19th of September on 25,415, and we are at 26,262. 800 points, ladies and gentlemen, and none of us have taken a breath. So one must understand when you see the weekly picture. This will be the third consecutive weekly gain, and so far 473 points in the past 5 sessions. Before that 434 points, and before that 504 points. So that's 800 plus 5, 1300, 1400 points in 19 trading sessions, 15 trading sessions, ladies and gentlemen. While we have been advocating intense caution, but the market is in a mood of its own. When that happens, the only thing that you don't have to do is short this market. I have been saying it repeatedly for months together. If you do not agree to this trend, stay on the fence. Don't buy a put, don't sell a call, don't short futures. Just remain in cash if you don't believe in this trend. The only thing that you should never do is argue with liquidity. And liquidity is coming in droves ever since the rate cut has happened, and which was September 19th, remember, the first day. The index itself has appreciated 1400 points. I'm talking about the Nifty. Please keep this thought in mind that the interest rate cut theme in India is now doing very well. And this is accompanied by one more positive development, which is fall in crude oil prices. This 2 plus 2 is not going to become 4. This is becoming 8. And therefore, you need to be very, very cautious when you try to short this market. You may do what you want, but remember, the market will remain more irrational than you can become financially viable. I have great examples, people trying to come out of their pain because they have shorted the market on uh, a weekly expiry or a monthly expiry, hoping that it will correct after 4 or 5 days of rallies. But no such thing is happening. Please understand this chal that the market is showing to you on Dalal Street and take adequate precautions. You are free to criticize as much as you like that this is not on valuations and not on fundamentals, but do not argue with liquidity. Sakshi.
Absolutely. So I hope everybody has taken that now down as well in terms of the advice, in terms of the trends in the markets are concerned. Extremely important for you to look at that. One more trend that's emerging now is the PSU banks come back too. Mitesh, you started off by saying that you're still not advising investors to really look at PSUs widely, but PSU banks, particularly stocks like SBI, PNB, Bank of Baroda, Can Bank, for instance, these stocks which are showing some signs of a reversal. How are you looking at this story unfold? Does it have promise?
Yeah, see, Sakshi, what we have said is that barring PSU banks, that's what we have said in our
Correct.
in the initial remarks. So, barring PSU bank in the entire PSU space, one can book the profit. But as I said, we have been bullish since long, and it is testing our patience. Probably as of now, PSU, Can Bank, PNB, Bank of Baroda, State Bank of India should and must trade 10 to 15% higher from that level. But unfortunately, it is not. And if you see the continuous downtrend in the PNB as well, as of now, the trade should be between 130 to 140, but it is at 108. So yes, PSU Bank is looking pretty interesting right now. One should definitely buy it.
Okay, got it. Meanwhile, Nifty has climbed to another record high, viewers. So you have 26,271 as the intraday high for the Nifty as well. And sharp moves can actually be seen across the board in IT space today for sure. Infosys is contributing the maximum points to the Nifty's gains today, about 38 points. TCS, ITC, Sun Pharma, Titan, HCL Tech and Hindalco are the other big contributors on the Nifty moves particularly. We haven't discussed FMCG with you thus far, Mitesh ji. ITC versus the other FMCG stocks. How would you really look at the story unfold?
So as far as ITC is concerned, yeah, we are of the view that now the story will come back and probably slowly and gradually stock will hit around 650 to 700 levels. But within the entire space, what is looking promising is Marico. If you look at the chart pattern of Marico, slowly and steadily it is building a base at the current level. And what we are looking at is around 10 to 15% upside as far as Marico is concerned. So 700 and I think 780, 820 is what we are looking at. So in the entire FMCG space, technically Marico is looking very interesting.
9:53, ladies and gentlemen. Time to look at volume buzzers. This has been a quiet day, and it's fine because we've had a fairly robust move that has come in over the last 4 or 5 sessions ahead of the weekend. People will want to sort of cool this down. Okay, Sakshi, I think it's IT and IT all the way. Coforge and Tata Elxsi have breakouts. You had mentioned that 5 out of top 6 Nifty gainers were IT in the beginning of your conversation, and that's panning out well on the volume also. Mitesh ji, I'll request you to look at Tata Elxsi. This is the erstwhile high beta counter, 3.5% higher, 8,085. And of course, we'll pay attention to persistent, 1.2% higher, 5495. Both of them are showing strong volume breakouts. Please pick your favorite in these two.
Yeah, as far as Tata Elxsi is concerned, I think after the stock has made its recent high at 9080 dated 27th of August 2024, and post that we had a very good correction. So now the stock is coming back, and I think above 8050 today, the stock has confirmed a breakout. So what we are looking at it is around 8500, 8600 again on the stock. As far as persistent is concerned, I think again the stock is trading at its lifetime high, and high top higher bottom formation on the weekly chart advocate the fact that the trend is intact, and going forward the stock will hit a new high. So probably in persistent, what we are looking at it around 5800, 5900 level. But among these two, Tata Elxsi and persistent, if I have to pick technically, the first preference will be Tata Elxsi.
Okay. Got it. Well, let's also look at some other pockets then. Mitesh ji, how about the fertilizers and the chemicals story then? This story has also started to pick up. There was a divided opinion on the street as to whether there is steam or no steam in this space. How are you looking at the chemicals and the fertilizers basket as of now, and any key stocks which are on top of your radar?
So as you know, we have already released a special report on the chemical space. So Balaji Amin's previous specialty in Punjab Chemical is our preferred pick. But within the entire fertilizer space, Coromandel International is looking very promising from the current level. We are of the view that Coromandel International will deliver 10 to 15% upside from the current level. And as far as the levels are concerned, probably from here on, if you look at the chart pattern, 1750 is what is achievable. So one should put a stop at 1600, 1600, and I think 1750, 1800 should be the target for the next 10 to 15 trading sessions. A strong rally is on the card as far as Coromandel International is concerned.
9:56, ladies and gentlemen, time to wrap up the market. Well, the rally seems to be now shifting to the IT space. Let's look at the Nifty IT index. Early morning, it was up almost 4 digits, but a bit of a cool off. You've seen a high of 43,377 today on the index. For the moment, just 651 points higher, 1.55%. And please remember that whenever an index kicks up 2% on a particular day, it is the start of a fresh rally, and newer and better stocks take it higher. Let us see how the day pans out for the Nifty IT index. If it closes 2% higher, then you have a fresh move coming in from record high levels, which were 43,690. Please keep this thought in mind. And of course, you have the biggest of them all, Infosys, now sort of at a kissing distance. Actually, it hit a record high in early morning trade. Early morning high was 1974, which is also the previous record of 1975. So just a rupee lower. Remember, this is the beginning of a fresh move in IT. For those who are trying to short this market, again, I request you to stay away rather than trying to buck this trend. This is fueled by excessive liquidity, and more of it is coming to the market, especially in large caps. Mitesh ji, before we let you go, your final view on HDFC Bank and Kotak Mahindra Bank.
Both are making very strong comebacks. And out of this, my preferred pick will be HDFC Bank. Today, it's a bit of a pause, but going forward, the stock will hit 1850, 1900, and sooner we'll talk about an all-time high. So yes, both the banks are on the front footing. Any dip should be bought into.
Okay. Got it. Well, we will start wrapping up the markets now for the morning edition. Thank you so much, Mitesh ji, for being with us on this special edition, sharing all your thoughts there. We'll continue to keep a tab on all the stocks that you've marked out for us. Viewers, record highs. We can't ask for more to 26,271 for the Nifty. The Sensex has also hit a record high as well. Look at the Nifty Bank, though. It's slightly on the back foot, 0.1% lower in trade, but it's the IT space that's actually been taking it away into the markets now. The IT index is now 1.5% higher in trade. Banking space is seeing some profits at the higher level, so keep an eye out on that throughout the trading session. Hindalco as the top mover on the Nifty. Sun Pharma follows with 2.1% gain. Infosys, Titan, IndusInd Bank, Wipro. These are the stocks which are in thick trade on the Nifty in the top gear. Now on the lower side, you have L&T, Power Grid, Bharti Airtel, ONGC, HDFC Bank. Still lower in trade. We'll see how it pans out to be, the first day of the new series, and whether the momentum sustains towards the end of the session too. Many thanks for joining in on the morning edition of Market Today. Do stay tuned. There's a lot more exciting lineup of top market guests who will be coming on the show to guide you on the market. Stay tuned.
She is the matriarch of the Jindal family, worth $40 billion. After her husband O.P. Jindal, Savitri Jindal contested from Hisar for Haryana Assembly election.